Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 26th September 2024. Hyundai Motor India Ltd, the Indian arm of South Korean automaker Hyundai, has received approval from the Securities and Exchange Board of India or SEBI to float an initial public offering or IPO. The company submitted its draft papers in June 2024 and the IPO might hit the markets in October. This is significant for the Indian automotive industry as Hyundai will become the first automaker to launch an IPO in more than 2 decades after Maruti Suzuki's IPO in 2003. The Supreme Court on Wednesday questioned the Byju's decision to settle Rs 158 crore debt that the edutech firm owed to the Board of Control for Cricket in India or BCCI and leaving substantial Rs 15,000 crore dues of other creditors including US lender Glas Trust Co LLC. The bench, which will resume the hearing on Thursday, hinted that it sent the case back to the insolvency appellate tribunal for fresh adjudication by applying its mind to the source of money. Smartphone brands are increasing their marketing and advertising budgets by 15 to 20% to capitalize on the upcoming festive season. The focus is on offering price discounts to clear stocks and target the mid to premium segment. Companies are also incentivizing offline retailers with cashbacks, free phones, and trips to Europe. SEBI's updated study reveals that 93% of over 1 crore individual traders in the equity F&O segment incurred losses between financial year 22 and financial year 24, with an average loss of Rs 2 lakh per trader. The top 3.5% of loss makers faced an average loss of Rs 28 lakhs. Only 1% of traders earned profits above Rs 1 lakh. Meanwhile, proprietary traders and FPIs booked profits of Rs 33,000 crore and Rs 28,000 crores in financial year 24, driven by algorithmic trading. Individual losses exceeded Rs 1.8 lakh crore over the last 3 years. India's natural diamond polishing industry is expected to see revenues plummet 25 to 27% on year to a decadal low of around $12 billion this fiscal. This was mainly on account of 3 reasons: muted demand in key export markets of the US and China, a 10 to 15% fall in diamond prices amid oversupply, and shift in consumer preference towards lab-grown diamonds. Lab-grown diamonds have gained significant share due to their affordability and high resemblance to the natural ones.
This podcast is sponsored by Sound of CA. We share because we care.